Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're well. Okay, just quick caveat. Anything said in this piece is only an opinion. It's for media publication and it's not advice, not investment advice, not financial advice. It's purely an opinion only. So let's kick off. All right, so this week you've got two massive numbers out. You've got Tuesday, Wednesday, the FOMC, the Federal Open Market Committee meeting. Remember, that is the monthly meeting of all governors of the governors of the Fed, governors of the national banks. And what they do is they get together on a 2-day meeting, discuss all types of issues, obviously to do with economic, finance, economy, etc., how the market's doing, and then they make an interest rate decision. That interest rate decision this month is going to be upwards. In other words, the Fed is going to increase rates by minimum 50 basis points, likely 75 basis points, an outside chance of 100 basis points. I'm going for the 100 basis point rise. I think the Fed's going to increase interest rates by 100 basis points at this meeting on Tuesday and Wednesday. The actual answer will come out on Wednesday evening UK time, which is 2 o'clock in the afternoon. 2 o'clock in the afternoon US time, just to be absolutely clear on that one. And the interest rates will be going up because inflation is simply moving up all the time. Inflation is going to continue rising throughout the winter months as energy prices go up and the cost of utilities start going up. So you're going to have oil rising, heating oil, gas, electricity, all of that's going to go up in the States and obviously in Europe and in the UK. It's going to have a big impact on inflation numbers, and therefore by the end of the year you could see a 4% interest rate in the States. I'm actually calling for higher interest rate by July next year. You're probably going to have 7 or 8% interest rate rise by July next year in the States. Now the central banks are in a bit of a difficult position because as they raise interest rates, they're going to impact on the economy and could cause it to go into recession or further into recession. Technically, we're already on a recession, whether it's in the US or Canada, Australia, Europe and the UK. They're already technically in recession by having 2 negative GDPs. And the UK is already on the cards. That's going to go into recession. Andrew Bailey and analysts and the economists have stated that the UK is going to go into recession. So what impact is the interest rates going to have? Well, the idea is to lower the demand. Remember, it's a demand-led inflation and also a supply-driven inflation with lockdowns in China and the whole frustration of what's happened over the last few years because of pandemic. It started with an initial supply chain block and then it just got exasperated as more countries closed down, and that's really the starting point of inflation is where we're at the moment. The dollar is going to continue rising because interest rate cycle within the States is on the way up. Looking at bonds, you've got the 10-year Treasury at 3.45%, which is lower than the 2-year Treasury, and that's inverted again. I've stated it over and over again. That is a lead indicator when it comes to recession. The same thing has happened now in Germany. So in Germany, you've now got the 2-year Treasury, the 2-year bond, the 2-year Bundesbond, which is now higher than the 10-year bond, and that again is an indicator of a recession, whether in Germany or in the States. So you've got to keep an eye on the bonds. Looking at shares, we're looking at shares like Apple and Amazon. Remember, FedEx fell 21% on Friday. This will have a big impact on companies like Amazon. Apple is definitely a sell. Apple is far too high and is way overvalued and has got no innovative products coming out at all. What it's doing is redesigning its phone, as we've stated over and over again. Facebook has also like to go down, with Netflix also going down because its competition is far cheaper, far better, and it's lost its way a little bit. As regards Tesla is a very volatile stock. I would expect Tesla to fall off significantly in the coming months as the cost of production increases and also the supply chain gets more tighter. So that's on the equity side. Going over to the UK, you've got Thursday, you've got big interest rate decision in Thursday run by the MPC, the Monetary Policy Committee, headed by Andrew Bailey, the Bank of England, who's probably the worst Bank of England chair I've ever seen in my life, but never mind. It's a small club there, they just invite anyone. So look after your mate and boys club. That's who gets a job. The more you fail, the better job you get. So what you've got is interest rates in the UK likely to rise 50 basis points. I think they're going to rise 75 basis points because inflation, even though it came in last week at 9.9%, it's likely to go much higher in September, October, and November, running at 13, 14, 15%, and they need to raise interest rates in order to dampen it down and control inflation. So will that impact on the pound? Well, the pound's been definitely oversold over the last few months, in the last year, I would suggest, probably since the beginning of the year. So it's looking like a buy at these levels at 113.50. It's looking like a particular buy. So what you could do is look to buy the pound, especially against the dollar. The euro is going to be under further pressure because inflation is also super high in Europe, and the euro is, the ECB, the European Central Bank, is well behind the curve on increasing interest rates as far as Europe is concerned. And as long as that's going to happen, then euro is going to go down because interest rates in the States are much higher, and therefore investors will put money in the dollar as opposed into the euro. Overall, that's more or less it. You've got the Queen's funeral today in the UK, so the UK is having a bank holiday. This is Mayor Walensky from Driving Markets. Have a good day.